All right, guys, I'm going to turn the audio back on then on Powell while we continue to try to work out some of these issues.
Is it better?
The process of dialing.
I think so, but it says that you're muted now.
No, I'm not. I'm not. I think it should be fine now.
Okay. Still says
Yeah,
you're muted, but okay. All right. Oh yeah,
that's
we can
fine.
kick it
If you
off.
can hear me, that's great. Yeah,
Yeah,
let's
you
let's
want
go.
to
So Tone,
let's save the FOMC for topic two when more people
yeah,
join.
sure.
You have another topic other than that? I
Oh
saw
yes, yes,
you
yes.
you, you
We
put a
we
BRICS
have
topic up in the nest.
exactly. I wanted to discuss that. It was a major news today that five countries have joined BRICS. Tone. We have Egypt, we have Ethiopia, we have Saudi Arabia, one of the major ones. What's your take on this, Tone? Like you have always been BRICS bull. So how do you see it now?
Yeah, I've been a huge BRICS bull, and I've done presentations years ago on how I think the BRICS are going to dominate our future. And all of these countries makes complete sense. Obviously, Argentina did not join the BRICS. I think it's the biggest mistake Argentina has made. I remained very skeptical of Javier Milei. I mean, it's great that he's not really a politician, and it's great that he's different. But I think Javier Milei is like a wolf in sheep's clothing, I guess, or the other way around. I think Javier Milei is a bit of a plant. I don't trust him. The United States and the Western governments love Malay. There was no complaint from the US government. There was no attempt at regime change. There was no attempt at stopping Malay. I think Malay is fully on board with the World Economic Forum. He stood there at the conference and made a speech about capitalism. But Malay's views of capitalism is not like my views of capitalism or a more honest person's views of capitalism. Yes, he's going to do some nice things in Argentina. He's going to cut down on the bureaucracy. He's going to cut back on the communism. But he's going to move Argentina into a completely fascist government where private corporations control the whole country, but not for the benefit of the people. Private corporations will control Argentina for the benefit of themselves and Malay himself. So I am very skeptical on Malay. I think he's going to cause a lot of harm to future libertarian candidates for presidents and future populist candidates for presidency. Now, he took Argentina out of the BRICS, which probably is great for the rest of the BRIC countries. It was Brazil that was pushing for Argentina to join the BRICS. And Argentina joining the BRICS, it would have been good for Argentina. And also, it would have, Brazil wanted another representative from Latin America. Argentina used to be a very capitalistic country. And the ability of the BRICS to stabilize Argentina would have been an incredible success story. Now, Javier Milei X'd all of that. Javier Milei believes that Brazil and Russia and China are still communist. I guess he never grew out of, I don't know, whatever they taught him back in the 70s. And so I think he has a ass backwards view on global economics. Meanwhile, he wants to completely turn his country and work with the United States and Europe. And we see how that worked out for other countries that tried working with the United States and Europe, with Ukraine being at the forefront, and countries like Sri Lanka that were the success story of the World Economic Forum just before the complete, breakdown of society over in Sri Lanka. So Argentina aside, the only country of the BRICS that was added into the BRICS that I can't really make sense of is Ethiopia. So let's put Ethiopia aside. The other countries are incredibly strategic. Egypt controls the Suez Canal. And that is an incredible partnership with Russia, China, and India because it would allow safe and cheap passage of goods between the Mediterranean and the Red Seas. That is vitally important and geopolitically strategic for the BRICS to add Egypt into the equation. Saudi Arabia and the UAE, these are two of the fastest growing countries. They obviously control a lot of oil and energy production. They are also geographically positioned to assist the navigation of traffic for cooperation with the Red Sea and the Persian Gulf. And Iran being added to the mix is probably the best strategic plan these countries could have done. Geographically, Iran is the only country in the world that has access to Gulf of Oman, Persian Gulf, and the Caspian Sea in order to help transition goods and services, especially oil and other natural resources, out of Kazakhstan, which also touches the Caspian Sea, and directly through Iran. And now these goods and services can go to and from India and China. These are very, very strategic plans. Ethiopia, I'm a little bit, I'm still confused as to the main reason why Ethiopia was added to the BRICS. A country like Algeria would have been very, very strategic, and invitations to countries like Indonesia would have also been very strategic, and Turkey. I think in the next round, a country like Turkey, which is getting very pissed off at the US, and a country like Algeria and a country like Indonesia would be the primary focus of the BRIC nations. And then eventually they may go after Mexico, but that would be very, very challenging. And Venezuela as well. Venezuela would be very strategic, but there's also a weird relationship between Venezuela and the United States, where getting Venezuela into the BRICS would be very, very tricky. The United States needs an oil backup, and I believe, and I've always believed for the last few years, that America has been, under the table moving oil from Venezuela into the U.S. because they are losing control of OPEC and influence on OPEC. Okay, that was a long way of explaining the BRICS, and I think this is huge for the BRICS to completely dominate the G7 nations going forward. Joe, would love to get you in on this. Any other comments? And then we're going to move on to the topic of the day, which is FOMC and Jerome Powell.
I have been trying to invite Joe onto the stage. I'm not sure, maybe he's listening to the speech or to the press conference, or he might be busy with something. So before I move on, Tone, so one thing is about being bullish on BRICS. The other thing, like, this is a trade agreement in a way. It's a union economic zone kind of a scenario. But when we are looking at it from a perspective of how we are seeing the geopolitical situation of the world right now, do you see some sort of, sides being created like we had before? Two different sides are being created. One is the NATO side, or the Western side, and then you have the BRICS, which is coming along, and they are getting stronger military-wise as well. Do you think that will have an impact on the economic zone as well?
Absolutely, 100%. Because the better the economic relationship is between two countries, the more they are aligned to protect each other to maintain that economic relationship. People don't realize how much Russia and China are on the same page. And if there was ever a military conflict, they will come to each other's aid. Same thing here with Iran. If the United States was to start bombing and attacking Iran, Russia may come to the aid of Iran because of their economic partnership. So yes, as countries become economically vital to each other, they start to become better friends in general. And you don't have to think of it from a country perspective. You can come and think of it from a friend perspective, right? A friend that you do a lot of business with that benefits you financially. Yes, you will come to the defense of that friend, because if someone else is able to take down that friend, that hurts you and your entire economy, and then your own people can rise up. So it's no different than right now the Arab world is standing up for and with Pakistan, even if they never liked, no, not Pakistan, sorry, Palestine, even though they were not, they don't like Hamas and they don't agree with Hamas at all, and they would have never been helping Palestine, but because of what's happening right now, they are. So it's no different when it comes to economics. So I think this is huge. Curious on Joe's take.
Yeah.
Hello, Joe. Welcome.
Hi. Sorry, I was wrapping up another call, so apologies for the delay. But
No problem. No problem.
so
Your time is always valued. What's your comments on this?
yeah. So sorry because I was only half listening. So the general discussion is just about the BRICS and moving from there where we're going with the BRICS. Is that basically the gist of it?
So yes, exactly. Like today,
Yeah.
what has happened with regards of 5 countries? Obviously, the initial part is what to expect economically, and then I wanted to little bit of like connection between not just economically, but even from the perspective of military. Like, how do you see this developing forward?
Well, I mean, I think the broad strokes takeaway, which is not anything actionable or something you can trade on or invest on in the short run, is that the world, as we talked about in a prior space, is becoming more multipolar. And I think that the BRICS are a legitimate, contender for being involved and having a voice in the global stage. I do agree with a comment I did catch briefly with Tone about Ecuador, and that's kind of a curious inclusion. But beyond that, I think that there's not much short-term impact. These things are very slow moving, and from my standpoint, I don't think it should be something that you're making decisions on or making actionable investments or trades on in the short term. Long term, I think the U.S. needs fewer enemies and more allies, and the real question becomes who are those allies going to be? So, from a geopolitical standpoint, I think the U.S. Would be well served by trying to continue to, expand global trade partners. And for me, I think that if they do not do that, it will be a very negative development globally for the United States.
Don't any comments, or shall we move on?
No, that's it. Other than no, Ecuador was not part of the equation. It was Ethiopia. So just like I said the wrong people. Yeah. Just gotta correct you there.
Thank you.
Cool. Let's address the elephant in the room. FOMC, Tone. Major points from today's press conference, or not press conference. Let's talk about the decision, and then we'll go into the press conference. And I know you have heard all about it. So rate hikes, no rate hikes in this meeting. So for the first meeting of the year, has gone with this. They are on a pause. Their target is still getting closer to 2% inflation. Tone, what are your views on what Fed has done?
Yeah, so quick observation. So the Fed didn't do anything. They didn't change anything. They didn't say anything that was all that relevant. Like it was just it's like they didn't do or say anything. Now I will say that unlike some prior press conferences by Jerome Powell, who looked like death, he seemed very happy and very cheerful, and finally, for the first time in like 3 years, he's actually enjoying staying up there. Like his body language, his tone of voice. He doesn't. He looks like he actually slept yesterday, unlike some of his prior meetings. Now, having said that, every single question from the press has been the following: why aren't you lowering rates? Everything is great. You promised you would lower rates. Why are rates still unreasonably high at 5%? That is basically every single question from the first 5 questions. And I think this is ridiculous. So somehow, based on their silly statements last year that they were going to lower rates, which Joe and I both said is never going to happen, somehow everyone and their mother seems to think that this 5.5% interest rate is unreasonable to the tune of Volcker's 14% Fed funds rate in 1980. And it's a bad place to be. So I believe that the rate is perfectly fine at 5%. It can even be a little bit higher. There is absolutely no reason to lower this rate. Everyone is like living paycheck to paycheck. No one has learned how to save money. And maybe because the rate has been so low for so long, no one has had an incentive to save money. No one's realizing that pension funds are grossly underfunded. And one of the reasons is because most of them invest in fixed income, which has not been returning anything because of the abysmal lower Fed funds rate. Uh, People got used to buying these houses with mortgages at low interest rate. That's not the norm. The current interest rate is the norm. It's even on the lower side of historical norm. And yet everyone thinks this is unreasonable. By lowering the rate for no reason whatsoever, they remove themselves from actually helping to stimulate the economy by lowering the rate in case there is another disaster, either free market-ish occurring like 2008 or government created occurring like the pandemic. So this is the thing that I find bizarre, that everyone is like yelling at him why he's not lowering the rate. Joe, your thoughts?
Oh man, you couldn't focus it better than what you said there about this. I think this is almost farcical. This obsession with lower rates. It comes from being a product of people coming to the market. I think in only a period where rates were NERP or ZERP and zero or negative globally, and really a lack of understanding about how various factors, both geopolitical, fiscal, from the increased government deficits, all these things can combine. And also just the change in our society post COVID can change to sustain a more high rate environment. And all these things that people throw up constantly about real estate, commercial real estate, about the banking institutions, about the junk bond that has to come to market is going to mature with these maturity walls. All of them are slowly being toppled, I think, because of the fundamental thing that is driving right now, which is the U.S.'s relative place, the U.S.'s in terms of economic growth. And I think that what you have to really focus on with Powell's remarks is what is he really concerned about? And as he made it incredibly clear during the presser, they want inflation back down to that 2% target. They are not going to let up until they get much lower with the 2%. And I believe they actually want to undershoot it to ensure that they can keep, simulating and doing whatever games they want to play later on in the event of an actual downturn in the economy. You do not see the data. I'm sorry for the folks that disagree with me, but I would challenge them to point me to real solid data showing deteriorating economic growth. It is not there. In fact, if you go look at the markup of the actual FOMC statement, they took out the language that said that economic activity has slowed. They now have replaced it with expanding. So even the Fed is swapping out language in their own statement, basically saying, listen, we've done a ton of hikes, and now we've got an expanding economy where job gains continue to remain strong, where the labor market continues to desire, especially near the lower end spectrum of income, more workers and cannot find it. And Powell commented during his remarks just a few minutes ago that he said, look, we lost millions of jobs after COVID, and we still are not back to trend. We still are trying to get people back into the workforce. That's not generally what you see preceding a recession. You see the opposite. You see unemployment rising. You see people unable to get a job, not employers clamoring to get the workers they need. And I also think that really underreported is that what is truly more stimulative? Okay, is a quarter basis point hike or cut more stimulative than the stock market raging towards new all-time highs, than the real estate market, still, relatively at relatively high levels? Those things all touch upon the wealth effect, which I think the Fed is increasingly focused on as a tool, both to slow and grow the economy. I think that their focus on that is basically saying, look, as long as we keep that market up, as long as the stock market is near an all-time high, consumer spending is going to remain hot, and that's going to mean inflation is going to remain hot, and that means that we don't really have a reason to lower rates. Lowering rates is supposed to be stimulative. Why would you stimulate an economy which still is above trend growth? And just to wrap up here before I let Tone get in, The Fed's own forecast says that they expect real GDP to run slightly below 2% for the next 5 years. We are going to post nominal GDP somewhere north of 5%, which means that if you believe the government numbers about CPI, that you're going to have above trend growth. Above trend growth is not a recession. Above trend growth is no reason to become accommodative and cut monetary policy. There is nothing that would give them reason at this point to say we need to reverse abruptly and start cutting. And I think that this will continue for the rest of the year, and the cuts will eventually be priced out. Anyway, that's my thoughts.
Yeah, that was perfect, Joe. I got nothing else to add. I'll give it back to our moderators. I think I don't know if we have anything more to say on this topic.
No, we do. I have a question in regards of this. So you are saying that we don't expect any cuts this year at all.
Well, I'm not going to go that far. I'm not going to go. We're not going. I mean, remember, we are talking about the government here, and if there's this kind of pressure on Powell in the very first meeting to cut the rate, I wouldn't be surprised if at one point mid this year, when Powell gets sick and tired of every reporter from all around the world asking him when is he going to cut the rate, he's going to say, okay, fine, I cut the rate by a quarter base by 25 basis points. Now leave me the fuck alone, because he knows it's not going to make any difference one way or another. So I'm not going to say it's not going to happen. I'm just saying it doesn't need to happen, and only the pressure will make it happen. Also, we have no idea what's going to happen in the future. The U.S. could enter a recession. I still think that we're a bit overdue for a serious natural disaster that could severely cut rates. Never underestimate that. Something else crazy going on, like Texas deciding to secede. Well, like there could be actual shock black swan events that would cause them to lower the rate. But if the data every single month the rest of the year is identical to the data that just came out prior to this most recent Fed call, there is zero reason for him to lower rate under current market conditions other than appeasing the trolls with a quarter percent down.
The thing is that the market at this point of time, at least for now, is expecting at least 5 quarter basis point cuts in the 8 meetings that we have this year. So he could go March without a cut and then the following meeting without a cut, and then suddenly we have like back-to-back cuts. Is that a possibility?
No, there's zero possibility of that. But again, if the stock market remains at all-time highs like it is today or yesterday, right? If the stock market remains strong, if inflation numbers remain over, in the vicinity of 2%, if there's no major, political event or a natural disaster or another stupid lockdown, like under current normal market conditions, at most I would expect is one rate cut. Now, conditions can change, but under current conditions, I'm not expecting it. Now, other people might be expecting 5 rate cuts under current economic market conditions, which I think is insane. But I don't know how the economy is going to look like, going into the election.
Okay, sorry. Where did I go? Oh, space, I hate you.
Joe, want to jump back in on this?
Yeah,
sorry about that. I was not on mute.
The bigger issue than what Powell is going to do, and I said this on our space over the weekend, was what Janet Yellen was going to do, and she increased issuance along all tenors. I think she's going to be supplying, bonds and bills to the market. But the good news is that she didn't overweight the bond and the note exposure, the coupon exposure, and because of that, I think, are not going to see the yields trend higher, at least in the short term, until she has to perhaps reverse on that next quarter. But that's a real big deal, guys. I mean, as much as you want to focus on the overnight rate and what the Fed is doing, if you're an investor, a serious money manager, and you're allocating, in a 60-40 portfolio or versus bonds, absorbing that additional supply by the market would almost necessarily cause yields to go higher. What are you seeing after the reaction today? Even though Powell came forward in the market and said, I'm not necessarily going to cut. We may not cut at all for the near term. You actually, if you look at the pricing in the bond market right now, you got the 10-year, which is actually receded 4 bips. It's getting bid. Same thing with the 30-year, got bid, just a basis point. Now, you can make an argument that, that's really, sort of overly optimistic. It's not really focused on the strong economic growth, and that bonds actually should be selling off after Powell's, commitment to bring inflation back down. I don't see it that way. I think it is a direct reflection of what Janet Yellen decided to do with her guidance, effectively, as to how she's going to fund the government moving forward for the next quarter. And to me, that's the story. I don't really care about what Powell is going to do with the overnight rate. I mean, to me, it's sort of totally immaterial, given that the actual stimulus that's being pumped into the economy in the way of fiscal deficits that are massive and structural is going to continue to make it difficult for the country to slip into a recession in the near term.
Very well. So let's stick to stocks for one more section, because we are seeing some sort of correction in the market. Not a massive one, but the market is not doing as it should. We have seen a lot of tech layoffs that have been happening in January. We are seeing PayPal, which is right now fighting off the 200-day moving average. We are seeing Google, that had a very, very bad day yesterday. How, even though Nasdaq is sitting at all-time highs, these stocks are also placed very well. Some of them. How do you see the market digesting all the earnings, and then no rate cuts, and then on course of it the layoffs? How do you see the market reacting to these things in the coming weeks?
I guess I'll go first. So the stock market hit an MRI top yesterday. So those of you that have watched my videos have been aware that yesterday was the day to start considering taking profits from the market, especially with the uncertainty of FOMC. Now, historically, FOMC is one of the best days to be invested in the market. Today, that clearly was not it. The stock market is down over 1% today. And this is basically, a childish reaction to the fact that Powell may not be cutting rates later this year. But what these people, what the bots haven't really factored in, because most of this is like bot trading, what the bots haven't factored in is one of the reasons why he's not going to lower the rate is because the stock market has performed so freaking well. Because when the stock market performs well, the economy performs well. That means people have jobs, people are getting paid, companies are strong, people are getting raises. Yes, irrelevant employees are getting fired because AI is coming, and automation, a new kind of automation is coming, and it's going to displace a lot of people, but it's going to make companies more profitable, and people will just, have to find other jobs, or I don't know, find another way to live, basically. But yes, the job market is still fairly robust, but I can certainly see a large amount of employees getting fired. Now, as far as earnings goes, I guess the expectations were high for the earnings. It's not that the earnings are bad. It's just that people expected more. And I think the stock market is going to absorb it just fine. After this tantrum, give it like 48 hours, and everything, I think, is going to be back to normal. And I think the stock market will reverse and probably make new highs sometime next month.
Joe, are you on the same boat?
Yeah, I wish I had more dissent there, but I mean, look, it's really difficult. I think investors need to keep things in perspective. Okay, you've had a rally for 3 months where you made all-time highs after nearly 2 years of just sideways price action. To me, with the economic data you have, with the Fed basically already signaling the end of their hiking cycle, so although that I don't think that's as directly relevant as many people think. I think it always was a big bugaboo in the minds of traders and investors. What is the Fed going to do? They've told you what they're going to do. They're basically reached the terminal rate, and it's only a question of when do they begin easing now. I don't necessarily think it comes anytime soon, but if you remove that sort of uncertainty from the equation, so I don't really understand why people think there's this massive sell-off coming. I keep hearing. I was because layoffs in a handful of companies. I mean, look at the layoffs that happened during COVID. During 2020, that was like one of the best years you could possibly want to buy stocks after the panic sell off. There were layoffs, tons of layoffs for the rest of that entire year because of the uncertain economic environment. And stocks went on an absolute rip. So I don't follow the logic of why people think that because there are increasing layoffs, which by the way, the reason those layoffs are occurring is because corporations want to shore up their balance sheets. They want to make sure that they can increasingly post the numbers that are in line with their forward guidance. That's why they do it, right? They lay off it because they want a bottom line number that is going to tell investors that we're making money. You're getting rid of the dead weight. Okay, that's how the system is supposed to work. That doesn't mean economic collapse or some huge recession on the rise. It means that some companies were bloated, they're readjusting, and it will help their bottom line in future quarters. Now, are there pockets of the economy that are soft? Absolutely. And you can actually go up and down the list. And Jim Bianco was in a room, and I'll just share with you, he made a great sort of breakdown of this. If you are right now trying to buy a Lamborghini, okay, high-end goods, catering to the top, 10%, 5% of the population, you can't buy one for 2 years. There effectively is a wait list for 2 years to purchase it. Now, if you are looking at Dollar Tree or Dollar General, low income, parts of the economy that are catering towards those that are not as well off, those are really struggling. They actually are seeing their top and bottom lines both decline. There's a reason for this. There's kind of a tale of two economies. The very well off have benefiting from the investments that they hold, which they hold the majority of investments. They're benefiting from high interest rates in the form of passive income through higher money market funds and higher T-bills. That's a stream of income, and that will keep them spending. It will keep them going on vacations. It will keep them contributing to the service economy and probably keeping service-based inflation elevated. But then, you've got pockets of the economy. Look at small caps, more vulnerable companies. They're really struggling. So I don't expect mega cap tech, which, from my point of view is like basically bulletproof. I don't expect them to go in some huge decline or huge bear market. They were due for a correction. Tone pointed out he's much better, technical analyst than I'll ever be. And I just think that it needs to reset. Nothing goes straight up. That doesn't mean that we can't have a really solid year for growth and risk assets.
So moving on, basically, I totally understand your point of view in regards of the stock market, and I totally understand, like, it is what it is. Like, it is bullish right now. We cannot see that sort of a drawdown. Like, it's showing strength in these situations. Like, at this point of time, what I see is the market being strong, Fed saying that the market is strong, the labor market is strong. So everything looks nice. But what about Bitcoin, Tone? We basically saw a 13%, 14% move up. And today it was kind of a seesaw. We basically went down, then we went up, then we came down again. How are you looking at Bitcoin as of now?
Yeah, and before I do that, I just want to do some shout outs. Thank you for joining us, guys. I recognize Mel, Winston, TC, Agartha, Jimmy, Credit Bridge, Red Pill, and Raymond. Raymond, shout out. Thanks for joining us. Okay, so Bitcoin. And I remain bullish here in Bitcoin. Just like there was an MRI top yesterday in the stock market, there was an MRI bottom January 25th. Now, the low in Bitcoin came on January 23rd. And you guys know about January 23rd. I was talking about that day for months. I had no idea what was going to happen on that day, but I was joking around. Imagine if that's the low after the pullback of the ETFs. And so far, that has been a low in the pullback. I really love time analysis just as much as I like price analysis. And I remain bullish here in Bitcoin, especially with the latest numbers coming out of what is happening with the ETFs, basically the purchases of the ETFs as of Monday. And I'm going to open up the exact numbers. Oh, man, I closed that Google sheet. Damn. Give me 1 second. I'm going to reopen the Bitcoin ETF Google Sheet so that it's in front of me. And GBTC number is going to come out later today, but as of the last full day of data that we have, what we, what is this? Sorry guys, got a bunch of stuff on my screen. We have 5,000, almost 6,000 more Bitcoin that was purchased by the ETFs and then sold by GBTC. On Monday, there was over 10,000 Bitcoin purchased across all the ETFs, and GBTC only sold 4,500 Bitcoin. So that is very, very bullish and optimistic. That's why I was bullish today. I was a little surprised. We pulled back even yesterday, and it looks like the ETFs are still buying Bitcoin. But not just that, it looks like we have clear winners emerging. I mean, I had a feeling BlackRock was going to be a winner in the Bitcoin ETF space, but Fidelity is right up there with BlackRock. I'm really liking how strong Fidelity has been, and the more important thing is that this week, it's pretty much only Fidelity and BlackRock that are buying Bitcoin. All the other ETFs combined have barely bought any Bitcoin. So out of the, say, 20,000 Bitcoin that was purchased by all the ETFs, like 18,000 of the 20,000, maybe even more than 18,000 out of 20,000 was purchased by Fidelity and iShares. And Fidelity is keeping up with iShares with the BlackRock ETF very, very well. So it looks like we have two clear winners here. That's a major bullish factor. All of these institutions that were selling Bitcoin, like FTX and Three Arrows, that were selling GBTC shares, that were exiting GBTC shares, the majority of that is done. I think these are good bullish fundamental factors for Bitcoin. We are just 2.5 months away from the halving, 3 at most. So yeah, I have to be bullish Bitcoin here, not only from a technical perspective, but also fundamental.
Joe, what's your take on this?
Yeah, I have to agree. I mean, I think I'm a little confused by the price action today. I mean, it looks like it's one of those things where I don't know if it was a short squeeze or something, but this pop that you had, I mean, we opened the day and I think we were down to 42,400 thereabouts, and then you had this really strange intraday pop that went really quick to the upside, and then we've lost it all again, you know, after stocks have been selling off. So that's kind of curious to me. But aside from that, I mean, you know, I remember historically there were days where, you know, if the S&P was down, you know, 1.5% as it is right now, you'd see Bitcoin down like, you know, 4% or 5%, or you're just absolutely puking. The fact that, you know, we're basically just, you know, slightly selling off or flat at best, to me, that's like really constructive. I don't see a lot of sellers. Like, I mean, obviously we know that the well-documented story about the GBTC, you know, sellers and people liquidating those positions, and I think everybody's, you know, covered that a bit, and I don't have anything to add on that. But you know, the bankruptcy proceedings, these things out there, I think they're getting depleted, and I think we're running out of sort of that narrative. I mean, even J.P. Morgan, if you don't believe me, they put out a note where they think that the selling in Bitcoin's mostly done. And then really the question is, you know, when can we just finally break out of this range, which we really have been in, you know, since early December. If you look like on a weekly chart, I was looking at that. You know, we had that range up here and waiting for the ETFs, and there was sort of the sell-off post ETF, which I thought was very predictable given the GBTC issue that we need to carve out. And when are we going to break higher? And it's hard to know when that occurs, but to me, a market like staying near the top like this, it just for a variety of reasons, it looks like it's ready just to break higher. And the question is when? Will it take a few more weeks of consolidating, getting the equity market to stop this sell-off? Possibly, but you know, I don't think you can be bearish Bitcoin here. It's really, really hard to be bearish.
Trust me, I try to find a reason every day to be bearish because I want price to go lower, so that I can try and accumulate as much as I can before the real move up. But I agree with you guys completely. It's starting to get very difficult to be bearish with all the fundamental side of things, all the technical side of things as well. Even the MRI bottom that came in yesterday, Tone, right? I think you took a trade on that yesterday or today, was it?
I'm sorry, can you just repeat that?
There was a MRI bottom on Bitcoin, right? And you took a trade off it. I saw the
Yeah,
reel that you created on Instagram. I was looking at it and I was like, that was fun.
yeah, there was an MRI bottom on Bitcoin like a day or two after the lows. But just like one more point on these ETFs, I was watching how the purchases of Bitcoin for the Bitcoin ETFs, obviously GBTC is selling Bitcoin while the rest are buying, but those other ETFs on January 24th, okay, let's go back to January 23rd. January 23rd, they bought 10,000 Bitcoin, and in the days prior to that, they were buying more than 10,000. Then the buying slowed down for the last 3 days of last week, Wednesday, Thursday, and Friday. The buying was just over 6,000, 8,500, and just over 6,000 again. So this week, I was actually expecting it to slow down again because the trend was going down. Okay, everyone piled in, and now investors are going to hold back. But that's not what happened on Monday and Tuesday. And today's Wednesday. We'll get today's numbers tomorrow morning. But on Monday and Tuesday, these ETFs combined purchased over 10,000 Bitcoin. So the amount of Bitcoin that went into these ETFs this week is higher than last week. It's on pace to be higher than last week, which is super encouraging. And the pace of GBTC selling is slowing down. So I can't think of a more bullish sign right now than that.
Oh, 100%. So, Tone, obviously, IBIT's flow is basically getting better and better. GBTC is literally phasing out slowly, steadily, not just from the perspective of AUM, like their total Bitcoin holdings are going down. And is it not looking like there might not be an end to GBTC with these other products, which are much better than what GBTC is at this point of time? Do you think filing for an ETF for GBTC was the worst thing they have done? Tone, are you on mute?
Sorry, Amadou, can you just repeat the question? I was listening, but I didn't understand the question at all.
So the question basically is GBTC's decision to file an ETF after, in hindsight, now, is it not looking that it was incorrect? Like they could have stayed the way they were and they could have held on to their Bitcoin. And now, right now, it's a never-ending sell-off for them.
Yes, maybe, but it would have been disastrous for GBTC hodlers. That discount would have been enormous right now. Everyone would have been exiting GBTC. I think they had to do it, but yeah, they could have held on to all that Bitcoin and continued milking 2% of all that Bitcoin. So yeah, I'm really curious what Joe thinks. In hindsight, maybe they should not have been trying to file the ETF. I think the initial attempt to do the ETF, they were probably thinking they were going to be the first and only one to become an ETF. And in hindsight, it probably would have been smarter for the company not to convert to an ETF and held on to it. They would have completely screwed the people at holding GBTC shares. But again, GBTC has made one disastrous decision after another. So them deciding not to convert to an ETF and screwing their investors would have been completely normal for their behavior, and them filing for an ETF and not capitalizing on how much money they can continue to make is also indicative of GBTC's bad decisions. So no matter which path they chose, it would have been a bad decision. I'm happy they chose this path because I was able to exit GBTC after the the discount went to almost zero. But that's a great question, actually.
Okay. So sorry, Tone. I got to get on this one. So You should not at all be thankful for what Grayscale did. Grayscale themselves had a gun to their head. Okay, and you can get David Bailey in the room and others that were leading a campaign against GBTC and were threatening litigation and had already retained lawyers to work on this. Grayscale almost had, was forced into filing the suit against the SEC. And I know with high degree of confidence, they did not expect to win that suit. The whole reason why that was filed in my world was pretext. They filed the litigation saying, yeah, there's probably a remote chance we can prove a very high burden of showing the SEC is arbitrary and capricious. So let's do it. That'll keep the monkeys off our back that are clamoring about how expensive the fees are and how we're not allowing redemptions, etc. And that was the impetus behind it. But then when I think they got in front of the judges and they laid out the arguments in a compelling fashion and had very excellent briefs that were submitted by the lawyers retained, they were able to convince the court that it made no distinction. And I think the SEC was genuinely surprised, including Gary Gensler, at the court's decision on the fact that the denial order of the ETF conversion. I think they expected the court to rubber stamp the SEC and say, "Yep, we agree with your ruling on this. We have no qualms about it." And that's where I think they were wrong. They were clearly wrong. The court disagreed. Now, if you look at the time frame, all these other ETFs, they almost all came to market, the filings, and wanted to have applications on file ready to go after oral arguments in March of last year. They all came, in the spring, late spring, early summer, when they started filing like crazy. So, people aren't stupid. They follow major legal proceedings. They listen to oral arguments, and they ascertained, I think the judges were leaning towards basically ruling in favor of Grayscale and finding that the ruling of the SEC was arbitrary and capricious. And then if you listen to Gary Gensler, he basically has said, look, the court made the decision. We don't have a say in it. We had to absorb the court's ruling, and that's that. We can't really fight with it beyond that. So he's kicking and screaming into approval. And I think Grayscale did not fully recognize or appreciate the likelihood of their success when they filed that lawsuit. Tone's exactly right. Why would you ever want to indirectly allow other ETF vehicles to come to market and cannibalize you? What's more, why would you even want your own vehicle to change to an ETF and then discount your fees from 2% to the 1.5 they're charging now? Makes no sense from a business perspective. But you have to understand that they had many players lobbying and threatening litigation and actively pursuing litigation against them for not doing anything and treating their investors this way. So, the real factor of it is the pressure that was put on them to have, for appearances' sake, to file litigation against the SEC so they could say, we're trying everything we can.
Tone, any comments on that?
No, Joe is definitely the bigger authority on that issue. And Joe is absolutely right. The pressure from guys like David Bailey, we're going to come down. And had they not filed for that ETF, they could have, continued holding all that Bitcoin in their cold storage and continued getting 2% off of that Bitcoin. Meanwhile, now it's 1.5% off of a much smaller sum. They already lost like 20% or something. But had they not done anything, they could have lost control of managing GBTC, and now they're making zero. And David Bailey's team could have taken it over, and they would have immediately lowered that fee to like 0.5%. Let the free market do its thing, and that's what happened here.
Well, talking about fees, Tone, we have seen a lot of fees cuts which have happened. Invesco and Galaxy are cutting their long-term fee on their Bitcoin ETF from 39 basis point to 25 basis point. We have seen Vanek CEO say that he's been like pounding the table and about being long Bitcoin from when the Fed will loosen its monetary policy. We saw the Bitcoin ads which went live on Google, and that basically resulted. So I was looking at some stats on Google that how many times Bitcoin ad appeared, and you would not believe the ad percentage for Bitcoin ETF was higher than your highest when they basically came off. So that was the highest shown ad for the day when it came out. So a lot of things are playing out in direction of Bitcoin ETFs, but this fees cutting after the updates, after the ETFs have been there, do these other firms are now seeing how IBIT is outperforming them, or like because BlackRock, IBIT has basically accumulated at least 35% of the total accumulation of Bitcoin by all the ETFs. So that's a big number. So have they won the race now? Can we give them the trophy and say, okay, we are seeing volume, we are seeing allocations, we are seeing AUM getting bigger and bigger. Is it is as you guys stated in the previous spaces once that you will get to see one of them running away and winning the battle. So is it now just coming to that phase? Joe, if you want to start off on that.
Let me just go real quick because I kind of already commented on that when I was talking about the ETFs. No, it's BlackRock and Fidelity. Fidelity is right there with BlackRock. Granted, yesterday BlackRock did buy a lot more than Fidelity. BlackRock bought 6,500, and Fidelity bought just under 3,000 Bitcoin. But you are right. BlackRock is 30% of the total Bitcoin that's been purchased is BlackRock. However, actually, they're more than 30%. Actually, BlackRock has 63,000 Bitcoin, while all the others combined are 98,000. So BlackRock is more like over 50%, like 60% of all the Bitcoin. But the other 30% is what do you call it? Fidelity. So the rest combined is where the problem is. The rest combined is smaller than Fidelity. So Fidelity actually has more Bitcoin. Fidelity is 54,000, and all the other ETFs combined are at 44,000. So Fidelity alone has more than the rest combined, and BlackRock has only 10,000 Bitcoin more than Fidelity. So BlackRock has 63,000, Fidelity has 53,000, and the rest combined is at 44,000. So I'm not going to give the trophy to BlackRock. Yes, BlackRock is the winner right now, but there is a close second in Fidelity, and I think those two are not going anywhere. I think ARK Invest is going to be around for a while, and but the rest, we will see.
Joe, your thoughts?
On just basically where we go from here with the interplay of the ETFs and who wins.
Yes.
Yeah.
Yeah. So I tend to agree with Tone once again. I just want to there's a few caveats. So I definitely think BlackRock's going to be a top player. They'll be around for a while because I think they're willing to do whatever it takes to sort of to subsidize that market, and they want to gain a huge market share because what these institutions do is they build in their ETF vehicles into a lot of their model portfolios, so they don't want to have to rely on someone else. So even if it's a loss for them, they're a big enough operation where they will keep it up and going and devote resources towards it, so they can build that eventually into their model portfolios on a going forward basis. So BlackRock's there. The same goes for Fidelity for almost the exact reasons. Big enough institution that they will float it, and they're also very pro Bitcoin. The remainder of the players, I think, are going to be pared down. The real question I still have in my mind is how much remains with GBTC. Tone alluded to this earlier that they've lost 20%. I actually think that's going to go higher. I would not be shocked at all if a year from now we're sitting and they have lost 40% or more of their market share. And then the question is, where does that go? It's probably going to concentrate in the top two I've just mentioned. And from that standpoint, I think Bitwise also has a play to be in among the top tier from some of the flows. But really, you're not going to have, I don't think, and I said this a couple of times, you're not going to have 8 or 9 Bitcoin spot ETFs. I think a year from now, they're going to be pared back. So those are really the winning horses in the race right now. And the question is how much longer you have the others hang on, and whether or not they will consolidate their vehicles down to those top core ETF structures.
Yeah, I completely agree with Joe that I do expect Grayscale by this time next year to probably be down at least 40% from where they were the day the ETFs were announced. And we can already see any other players, Valkyrie, Van Eck, they haven't bought any Bitcoin in the last 2 days. Monday and Tuesday, they did not purchase a single Satoshi, according to their websites and their documents. That's what I'm following. And then Invesco and Franklin, they bought 60 Bitcoin yesterday. Again, that's not a material amount. So it is going to come down to just those top four. And out of those top four, we have clear winners with BlackRock and Fidelity.
So there's a question for you, Tone, from Truth is the First Casualty of War. The question is the Fed independent enough to resist a call from the White House to lower rates to help their election prospects? Could this be the reason, Tone, for the rate cuts?
So I think it's not the Fed itself, right? It's this particular Fed chair. I believe that Jerome Powell will not be intimidated by this White House. So that goes into the favor of, the Fed's independence. The Fed is only as independent as the chairs that rule, that manage the Fed. Same thing with like the Supreme Court, right? Like it's only as independent as the judges want to be. And they certainly have their political views as well. So this particular Fed and this particular chair in particular, I think he hates Janet Yellen with a passion. I think he knows Biden is not mentally there. And I think they will completely resist the White House telling them what to do because they see themselves as being smarter than whatever the White House and the Treasury Department thinks. Now, if Trump is the chair, as Joe mentioned in our last space, considering Trump's relationship with Powell, Powell doesn't like Trump very much either. So if Trump calls Powell and asks him to do something, Powell may not want to do it either. But usually what happens is the Fed chair is very friendly with the administration. And when the administration asks for favors, the Fed tends to do it. I just don't see it happening with this particular Fed and, the current president and the most likely future president, though I'm still very skeptical on Trump actually becoming president. I still think, the opposition has some more, let's just say, Trump cards up their sleeve to make sure it doesn't happen. Joe, your thoughts on this?
I think that there's a total overemphasis on the Fed, and we talked about this earlier. The bigger issue is entirely what the Treasury is doing, and if you're looking for a political motive to shore up markets, it's all about the Treasury supply and not issuing more coupons to the market, which are more difficult to absorb. So, to me, again, the fact that people think, for some reason, unbeknownst to me, I don't really quite understand it, why cutting 25 bips or 50 points is going to somehow cause the stock market or the economy to rebound or reaccelerate. I think that's just totally wrong. They're not meaningful enough to actually move the needle. What moves the needle is, if Janet Yellen decides to issue $250 billion worth of long end bonds, which are going to be really hard to absorb. Someone's got to sit on that paper and buy that, and that's going to hurt asset prices. And her decision today, combined with her decision last October, to really overweight short-term issuance far above what is typically of outstanding securities, that is a real departure from, I think, the norm. And that's why the market, bottomed back in October, and I think that's why the market's going to continue to perform well this year. It's just a calculated decision by Janet Yellen, who is partisan, who is working in the Biden administration, to not put undue pressure on markets right now up in an election year.
So let's move away from the US stock market and go a little bit towards China. First of all, China, there's been an ETF filing for by Harvest Fund in Hong Kong. So that would be the first ETF, if approved, to be traded in Hong Kong from the Chinese market. That sounds bullish for Bitcoin for sure. That basically China at last is trying to be again crypto friendly. after their previous actions. But also, we have seen like the Asian stock market across the board has declined today. Obviously, there was Fed interest rate decision coming, so that always has an impact on the Asian market. But we have seen some news from the liquidation of Evergrande. We have also seen a decline across the Chinese market, showing that manufacturing is getting contracted, and basically it's been 4 consecutive months that they are seeing manufacturing contracting. So, Tone, does China's manufacturing in numbers and also their stock market performances over the last few days or weeks, does it, to be honest, last few months, in my opinion, uh, isn't it a big red flag for the global economy as a whole as well? Like we are happy, Nasdaq is sitting at all-time highs, S&P is sitting at all-time highs, but China kind of is a very crucial player in all of this.
Man, so I actually have not kept up with the Chinese stock market or the Chinese economy all that much. I've just been, between the Bitcoin markets and the geopolitics of Eastern Europe and Middle East and the US issues with Texas. I've just been completely absorbed in other ways. So, look, I don't think it's a big deal. I think China is just such a massive economy that, yes, when the stock market falls, it hurts, but it doesn't hurt the common person all that much. Well, like I can't imagine the common Chinese person so heavily invested in the stock market. By percentage, is probably less than in the United States. And even in the United States, when the stock market crashes, the bigger problem is, companies staying alive and retaining jobs than it is for people's portfolios. So I think it's the same in China, and also in China, I think the stock market falling has less effect on companies going bankrupt than say in American markets, where once your stock gets destroyed, your company's pretty much done. So I don't think I don't think it's going to be that much of a problem. I think China is going to figure it out. I think they're going to right the ship back up, and I think China will be fine.
Joe, any insights from you apart from China being fine for now?
Yeah, I think it's really fascinating because you have this narrative that goes around that markets only rise because of monetary policy or QE, or markets only rise because of fiscal spending. Well, China's done a ton of that. They've done billions more than we have over the last 2 years, and their stock market has basically continued to sell off, and even the huge package they just released. You see a clear commitment from policymakers to support the stock market. Guess what? The market doesn't care. It's still selling off. Gave up half the gains it bounced from the last couple of days. So this meme out there that the Fed can just cause asset prices to rise, I think is just wrong. But aside from that, I do think you have to focus on the fact that one of the reasons why the Chinese stock market continues to perform the U.S. stock market is because people have real concerns about deploying capital in the Chinese market. There's plenty of accounts, and I'm not going to get into this in a lot of detail for a variety of reasons, but there are plenty of accounts of capital flight concerns in China, people wanting to get money out of China because they are worried about confiscation. The rights you are afforded in the United States, and Tone and I may disagree with this, but the rights you're afforded in the United States are exponentially more than that in China, and people who put serious capital to work in China. Many international entities don't want to even have to deal with China bank accounts or the banking sector because they are suspicious of the government there. So that's very different than the capital center of the world, which is the United States. So I think that's one of the reasons why you see a flight to quality in terms of American mega cap tech, because of the rights and privileges that are afforded with owning those entities, which are really, those Apple Computer could rival the productive capacity of many nations, many small nations. That's why we just have a relative outperformance. It's not necessarily driven by the liquidity picture or their economy. It's fundamental factors about the entities in the United States. And if you want to look at like the stock market, we always say the stock market. The stock market in the United States, there are plenty of sectors and segments and things like small caps, which still look really weak, right? You're really talking about U.S. mega cap tech companies that are dominating the S&P 500 and driving it to new all-time highs. I don't see that as a problem, by the way. I just think it's like you have to look at what you're actually comparing. Comparing that to Chinese companies, which have a host of lingering issues coming out of how they approach the pandemic, and they lock down their people for a lot longer than the United States. All those things are dragging on the Chinese economy, and it's not going to be enough. A bailout package or other other measures by their central planners to get them out of this rut. They need to actually rethink their economic policy, and I think that also the reshoring efforts that the United States is undergoing, as well as other countries that pivot away from exposure to China, are having an effect. So they need to think through their macroeconomic policies if they want to get out of the rut that I think they are currently in.
Yeah, let me just reiterate what Joe said. So Joe, you and I actually agree. So yeah, yes, I'm a little less bullish on America than you, but you are absolutely right about China. And we brought up this topic last time, and I forgot who the other speaker was that mentioned that he's expecting China to be the next global financial superpower. And the only way that is going to be true is if people trust investing in Chinese companies more than they trust investing in American companies. Now, I think that is eventually, but not coming exactly, but I think that the US is going to screw things up so badly that these American companies will no longer be American companies. And I'm not saying they're going to be Chinese companies. I'm just saying they're going to be stateless, or they're going to go into, offshore tax, havens like Caribbean islands, or they're just going to be public on the blockchain, on the Bitcoin blockchain, of course. But I think there's going to be a huge technological paradigm shift if the United States loses control of the trust and people see the United States in the same light that Joe just explained China, where the world, not only Americans, but also non-Americans, are scared to throw their money into the United States and the American banks, the American companies. That is still true in China, and that is still true in Russia, even more so in Russia than in China, perhaps. And until these countries change that perception, okay, it could be just perception, it could be reality, but it could also be perception. And these are multi-decade trends that need to be reversed. So for now, it is absolutely true that international capital is not finding safety in China. It is still finding safety in the United States, okay? But if the United States federal government decides to go to war with Texas, then all of a sudden, the United States will find themselves in the same position as China, where international capital is scared to invest in the United States because they may not know which United States they're even investing in. So, but for now, yes, the United States is still absorbing all the international capital fleeing for safety.
Guys, I have to jump. I'll talk to you soon. Thanks for having me up.
No worries, Joe. Thank you so much.
Joe.
Tone, just one last question. Joe, do you have anything to add before you go? He's already gone. That's fine. We have a question. Let me see the profile, and then we can take it from there. So, Joe, Tone, I have a question for you in the comment section. Let's take that one first. What do you think will happen to all the people that bought the smaller ETFs, that is Bitwise, if they choose, if those cease to exist? Will their ETFs that they have put in their retirement portfolios be transferred over to a larger institution like BlackRock, or the buyers are just screwed?
So look, as long as those other ETFs, as long as the bid-ask spread of those ETFs remains within a few cents apart, it doesn't matter which ETF you're holding. But if one of these ETFs was to, completely fall apart, you would be notified by your exchange. And this is how I think it goes. Don't hold me to this. You'll be notified by your exchange that they will offer you, that they will convert you to another option, to another ETF. Or they're just going to sell the shares and redeem it for cash, and you're going to end up with cash in your account, and then you will have to enter another ETF. But I think all of them are still going to exist a year from now. I don't think any of them are really going to disappear this year. A small company like Valkyrie is potentially a buyout target by one of the other companies. Like I can see Fidelity buying Valkyrie or Ark Invest buying Valkyrie. And if they buy Valkyrie, they will just tell the broker that they are gonna, decommission the ETF and to just convert current holders of that ETF into the other one that is held by a company that was the buyer. So it's I don't expect anything this year, but we'll see how it goes into next year.
Well, that's it. That was perfect. Your question is answered. Whosoever asked it, it was Johnny King. Uh, so, Tone, any closing comments for today before we meet each other again on Saturday or Sunday, depending on when you're free?
Let me just glance at the price of Bitcoin. Wow. So after massively rallying just before the Fed started speaking, the price of Bitcoin is down pretty heavily once again. I remain still pretty bullish in this market here with Bitcoin. We lost all the gains that we got from, say, 7 a.m. until noon. And I think once this news blows over that the Fed is not looking to lower the rate anytime soon, and people realize that the reason they're not lowering the rate is because there's no need to lower the rate. Everything will be back to normal, and I do think more buying pressure into Bitcoin will set in.
Well, thank you, Tone. Thank you for your time today. Looking forward to talking to you over the weekend. We'll have a lot more data that's going to come in, a lot more price action that would have happened. Also, the market digesting all the information or all the news that it has got from today. So, guys, if you haven't visited the Financial Summit website, do visit it. We are a luxury event that happens every year. Next one is in March 2025. It's going to be in Maldives, and you will basically get to meet a lot of people from different part of the world, hedge fund managers, money managers. You'll have traders, you'll have VCs, you'll have a lot of different type of knowledge sitting in one room. It's the perfect place to be. It's the perfect place to grow. And obviously, Tone, if you said you gave the presentation for BRICS a while back, you gave it in the Financial Summit in November, if you remember.
Yeah, I gave that presentation at the Financial Summit. It was a remake of a presentation I did like 14 months earlier in Kazakhstan. And I still haven't done that presentation publicly, but I probably should. Maybe in a few months, maybe we'll do it on the Financial Summit YouTube channel. We'll see.
We should. Well, thanks a lot, Tone. Thank you for your time. Looking forward to talking to you again on the weekend.
All right. Thank you, guys.
Thank you.
And thank you, everyone, for joining and listening in.